No question about it. For Musk and his company Tesla, things have been going really well since the company went public. Musk has been very important to Tesla's success. At first, people didn't believe in electric cars, but now a lot of people are moving to them. More people are buying Tesla cars, which has helped the company grow and do well on the stock market. A lot of experts who used to be against the company's stock are now for it because it has grown so much. A person like this is Jim Cramer. Jim Cramer used to be negative about Tesla, but is now positive about the stock. And Jim Cramer has shown that Tesla stock is going down. Why did Jim Cramer change his mind? Before you put money into Tesla, what do you need to know? Let's watch this video to find out. When Jim talked on Mad Money on Monday, he said that sometimes things do go well. So, if you want to make money buying in the long term, you have to stop being so skeptical in the short term. Most of the time, the phrase "hope springs eternal" is used in a bad way. Even though there were problems with the supply chain and prices went up, the S&P 500 still managed to make more than 27% last year. You might think that the only people who think good things happen are stupid. It's better for Cramer to be stupid and make money than smart and not make money. Putting money into the stock market can take a lot of time at times. We're going to look at some information from Jim Cramer today as we look at the basics of Tesla stock. Jerome Powell, the head of the Federal Reserve, recently talked about the scheme for the government to buy bonds. He had already said that it would be slowing down as the pandemic got better, but he seems to have changed his mind recently. Powell said that buying bonds would stop sooner than expected, and that was all it took for investors to lose their minds. Cramer went on to say that the timing couldn't have been worse because investors were worried about the Omicron version. If someone invests in an index fund, what does this mean? Cramer says that people buy stocks with the long term in mind. This means that the recent short-term drop is just a chance to buy. Still, he was cautious and told viewers to wait until the first proven case of Omicron showed up in the US. This caused more people to sell and marked a short-term bottom. For now, buyers can still buy tech stocks like Amazon, Microsoft, and Tesla, as well as dividend stocks, which will do well in this situation. In the end, it's better that the Fed told everyone what he was going to do. Cramer says that in the stock market, there are 4 kinds of buyers. The first group is scared of inflation and will do anything to get you to sell your stocks. Some people in the second group thought the Fed would raise rates, but not so quickly. The third group is just trying to keep their gains so they can buy back in when the price drops. People in the fourth group are worried about a drop in Omicrons. What's wrong is that none of these groups can be right. The Fed will slow down its tightening process if there is one. But if the Fed does tighten, things must not be as bad as people thought, which means that buyers will soon be back in the market. That's why it makes sense to buy when prices are low. To begin, most people think of Amazon as an online store. For good reason, it has become the online market of choice for millions of people around the world. But the business is also involved in 2 other growing fields that could help it grow a lot over the next 10 years. 3 fast-growing fields that the company works in are e-commerce, cloud computing, and digital ads. The market value is now $1.7 trillion, and it will likely go up in the years to come. To give you an idea of how big of a lead it has over its competitors, Amazon has a 41% piece of the US online shopping market. Walmart, on the other hand, has a 6.6% market share, which is a lot more than the next closest rival. One more thing. Amazon has a 32% share of the global cloud computer market, while Microsoft only has a 21% share. Its operating margin on AWS was about 29% in the last quarter, while it was only about 4% in its North American e-commerce business and only 1% in its foreign e-commerce business. This is how the company makes more cash flow. You may be worried if you own shares in Amazon because the company has had negative free cash flow for the past year. In fact, cash from business has gone down by 1.2%. Amazon is already putting a lot of money into growing its shipping network. Andy Jassy, CEO of Amazon, said in the most recent quarter that the company has almost quadrupled the size of its delivery network since the start of the epidemic. He thinks this will help them give customers a great service experience and give them an edge over their competitors. Microsoft reported $51.7 billion in sales and $18.8 billion in net income for the second quarter of 2022 on January 25, 2022. The net income has grown by 21%, while sales have grown by 20%. Office, Windows, and Microsoft Cloud Services all helped the company make more money in the third quarter. We looked at the data for the first quarter of fiscal year 2022 and the whole fiscal year 2021, but not devices, server goods, or cloud services like Microsoft Azure and a few others. Almost every other segment has seen big growth. Investors will want to see this project keep moving forward. Recently, Microsoft's margins have been getting better, which is great for owners. It's important to note that the EBITDA margin is now above 50. This is also due in large part to the intelligent cloud's better operating income. For instance, Microsoft has a strong balance sheet, even though it gives a lot of money back to owners through dividends and buybacks. The company recently said that it had over $150 billion in cash and short-term investments on hand, but only $50 billion in long-term debt. The amount of cash and short-term investments makes up more than 5% of the marketplace value at the moment. The net debt makes the company worth $2.24 trillion, which is $50 billion less than its market value. When the earnings for the second quarter are released, shareholders should expect the capital structure to stay the same. Because of how the market is currently valued and how things are going, Microsoft's recent drop from all-time highs may be a great time to buy more shares. For long-term buyers, buying things little by little might be the best way to go. What about Tesla stock? Elon Musk is likely to join the call again to talk about the findings. Does this mean good news? Tesla just recently reported its profits for the fourth quarter. Investors were looking forward to seeing CEO Elon Musk on the post-results call and were ready for news that could be scary about the Cybertruck and supply chain problems. Wall Street was told by Musk that he probably wouldn't be on any more Tesla earnings calls unless he had something important to say. He wasn't on the call for the electric car company's third quarter in October 2021. It has been said that the Cybertruck has been put off even longer. The pickup. Americans have loved pickup trucks for decades, and Tesla was supposed to start making them this year. They should start making a lot of them in early 2023. GM, Ford, and other original equipment manufacturers, as well as new companies like Rivian, already have electric pickup trucks on the market a few months ahead of Tesla and a few years behind plan. What does this mean for Tesla, then? Should people who spend hope for good news? Wall Street was shocked when Tesla had record sales in the fourth quarter, up almost 90% from the same time in 2020. It looks like Tesla will have another good quarter. The company has had a great run of beating sales expectations. Due to the high fixed costs of making cars, Tesla's record quarterly production and sales give it a lot of room to improve its bottom line. The most important things for earnings are Tesla's production timelines, its guidance for 2022, the startups at its new factories in Texas and Germany, mainly because of supply chain problems and shortages of semiconductors, and the next steps in its long-term plan to boost production between 2020 and 2030. That being said, Emmanuel Rosner of Deutsche Bank thinks that Tesla will give a good update on its growth and margin potential for 2022, along with a regular schedule of releasing new products and technologies. You might also be able to guess when Tesla's new factories in Austin, Texas, and Germany will start making cars. You might also learn more about the company's work with alternative energy sources and see how its own battery production and sales in China are going, now that the two new plants are up and running. Alexander Potter, an analyst at Piper Sandler, thinks that Tesla has enough ability to make more than expected. Still, he thinks that China's zero-COVID strategy could make it harder to do business in Shanghai. Tesla had a good start to 2022 when it said it delivered more cars than planned in 2021. There's no reason why it shouldn't keep having a great year. Due to its cutting-edge technology and loyal customer base, Tesla is the most important company in this market. As the industry grows, Tesla will automatically gain. What do you think about what Jim Cramer said about Tesla stock? Leave a comment below.